Well, great news for markets. It looks like the conflict between Israel, the US, and Iran looks to be concluding. So hi there everyone, welcome to the Traders Circle Weekly Market Update. It is Tuesday the 24th of June 2025, and before I start, you do need to be aware that whatever I say is general advice only. So we had a US strike against Iran on the weekend. Trump used bunker-busting bombs to target some of their deep underground uranium facilities. And on Monday, it looked like that escalation was basically going to trigger massive selling in markets. Indeed, the Australian share market closed lower for the fifth straight session. However, overnight, US markets actually rebounded from their weaker futures and they finished in the green. And that was after it looked like the Iranian response against the US strikes was going to be fairly limited. They launched a few missiles against a US airbase in Qatar. I think they might have done a few other missile strikes on US bases, but they informed America in advance of these strikes. Now, by informing America in advance of the strikes, they knew the Americans would be able to shoot the missiles down. They knew that American personnel were unlikely to be harmed, and it really told investors that Iran didn't really want things to escalate further. They certainly weren't going to shut down the Strait of Hormuz, which the market saw as the big risk, I guess, in the short term of a potential Iranian response. If Iran was to shut down the Strait of Hormuz, really it would be hurting their alliances with other nations more than potentially hurting the US or hurting Israel. So I don't think that's surprising that they didn't do that, but it is surprising, how much they were willing to sort of de-escalate with their response. Now, after that, following that, this morning we had news that Israel and Iran had agreed to a ceasefire. Donald Trump announced it on his equivalent of his Twitter platform, and it seems like, for now at least, there is a ceasefire in the conflict. As a result, our market had a fantastic session today. US futures are strongly higher at the moment. And if the ceasefire does hold, and it's not guaranteed that it will hold, if it does hold though, I think we will see global share markets continue to rally over the next few sessions. Now that is despite what I would say was a pretty negative Federal Reserve meeting last week. Indeed, Fed Chair Powell in his statements afterwards basically said that they're worried about inflation being higher than they previously thought following the Trump tariffs. They think unemployment's going to steadily tick higher, and they think that economic growth is going to be weaker than expected as well. They still retained the two forecast rate cuts in the dot plot in their member projection for interest rates. So they still think there's going to be two rate cuts this year. However, they lowered their forecast for rate cuts next year. Overall, the meeting was basically about as bad as could be expected for US shares. I guess the only silver lining is that they still held the two forecast rate cuts this year. The reality is, though, they are forecasting higher inflation and lower economic growth, and they did warn of risks to both the upside in inflation and downside in economic growth in those forecasts. That really points to a situation where they think there's a possibility of stagflation, basically. And yeah, with Trump's tariff pause coming to an end early next month, I really can't see a silver lining, other than that they think there still could be two forecast rate cuts this year. So with that meeting basically about as bad as could be expected, it is a bit surprising that markets held up. However, as I mentioned last week, I think it's a bit of a case of markets focusing on the short-term thing and then rejoicing when that short-term thing is resolved. So in this case, markets, I think, are focused on the short-term positive of the conflict between Israel and Iran de-escalating, and then rallying on the back of that short-term issue being resolved. The longer-term issues, though, they remain firmly in place. And those longer-term issues are, basically Trump slowly killing the US economy at the same time as essentially US government debt skyrocketing and likely to grow significantly further. This week is going to be all about inflation from here. So tomorrow we've got Australian inflation, the monthly CPI indicator. Basically that's going to tell us the likelihood of a August rate cut from the RBA. I think pretty much everyone's ruled out a July rate cut. And that's due to basically recent inflation for Australia being stronger than expected. But this data point is basically going to tell us whether or not they can cut rates in August. We saw a pretty terrible Australian unemployment reading with only 8,000 full-time jobs created at last month's unemployment numbers. And that would lead, I think the RBA to cutting rates in August. However, they can't do that if the inflation reading tomorrow is stronger than expected, or much stronger than expected. If it's in line with expectations or lower than expectations, I think we will see the August rate cut. And so, if that happens, we will probably see our market jump tomorrow. That being said, if it's stronger than expected, we'll probably see some selling. It's a somewhat similar story in the US. Obviously, they want to see a lower PCE price data reading, and that will be released on Friday night Australian time. If that PCE data, which is the Fed's chosen measure for inflation, if that comes in lower than expected, we will probably see US markets start to head back to their all-time highs, their February peak. However, if the PCE data is stronger than expected, we could see US markets top out below their February peak, which from a technical perspective would not be a strong signal at all. Like I said, the PCE data that's coming out on Friday, that's a measure for inflation in the US, and that is the Federal Reserve's chosen measure, or their most preferred measure for inflation. We're going to basically be looking to that data to see if Trump's tariff effects are starting to show up in price growth. Now, this data point, I'm not sure how relevant it'll be because, one, it's come after the tariff period pause. A lot of the tariffs aren't counted in this data point. And at the same time, it also considers the effects of consumption. And if we see consumption reduced in response to higher prices, I'm not sure how strong that PCE data is going to be. Regardless, everyone will be watching it. It'll be after our market closes for the week, so we'll react to it on Monday. And I think it's going to be the deciding factor as to whether US markets go to the all-time highs again, or whether they pull back from here. So let's have a quick look at what that would look like. We saw the US markets bounce overnight. They held the pretty key support level at 59.70. They bounced off that level. And as I mentioned, if their PCE data on Friday is lower than expected, I suspect we'll see them reach towards the February peak at 61.50. Really not too far away now, only about 2% away. I mean, with the ceasefire announced this morning, they might get there before then. If the data is stronger on Friday, we might see a break below that 59.70 level. If that happens, I think it'll be a fairly bearish technical sign. That could mean a move back towards 57.75, the peak back in May, and then the peak back in March. If we have a quick look at the Australian market, and this is the Australian XJO index. Basically, we reached our own all-time high about a fortnight ago now. We got to 86.20. Obviously a very high level for our market, probably quite extremely overpriced, but fundamentals aren't mattering too much at the moment. We reached that all-time high level, and we've pulled back for the past fortnight. In fact, we actually fell below a pretty key level at 8,500 on Monday in yesterday's session. And that was after the Trump strike on the Iranian nuclear facilities. However, we did manage to completely rebound in today's session with the ceasefire, with the pretty lackluster Iranian retaliation, and we're showing a pretty strong bullish signal at the close today. If US markets do have a strong session tonight, and if our inflation is lower than expected tomorrow, I think we'll very quickly return to the all-time high, just above 8,600. We could be there as early as tomorrow afternoon. So I will wrap it up there for this week, guys. Hopefully you enjoyed. If you did, click like, click subscribe, and we'll see you guys next time.